Will farm budget cuts hurt farmland values? Insight on that, tips on farm safety, market prices, and more for this Monday, October the 8th.
Good morning. This is the Morning Ag Report with Wayne Jenkins and Brian Baxter, bringing you the world of farm and agribusiness information.
Well, good Monday morning to you, and welcome to this edition of the Morning Ag Report. I'm Wayne Jenkins.
And I'm Brian Baxter. We hope this 8th day of October is off to a good start for you and your family.
Well, first in the news this morning, early last Friday morning, the House rejected the budget agreement that had been worked out between the Bush administration and congressional leaders. The vote, 254 to 179 against. Now, that action stalls plans for a $1.3 billion cut in farm program spending in fiscal 1991. But Ag Secretary Clayton Yiter criticized the House members who voted against the measure. Yiter said the House action makes farm programs even more vulnerable to cuts because farmers are at a disadvantage. They can't make plans, and because the lack of deficit reduction will keep interest rates high. At the same time, Yiter pledged to fight any budget proposal that calls for farm program spending cuts of more than $13 billion over the next 5 years. And much of the talk last week did center on budget proposals calling for an immediate farm program spending cut of $1.3 billion.
That, along with higher fuel expenses due to the Middle East crisis, has many farmers worried. And joining us now is Murray Wise, president of the Westchester Group in Champaign, Illinois, a farmland real estate firm. Murray, do you feel the farm budget cuts and the Middle East crisis will have dramatic impacts on land values and on the farm economy?
They definitely will have an impact, Brian, particularly from the expense side or lowering of the income side, depending on which side of the ledger sheet you're looking at. Definitely will have an impact. But the same token, with a stability, very stable level of income we have in the 1990s and on into 1991, I believe the impact from a total perspective will be very minimal.
Murray, what about the overall trends you're seeing? As 1990 goes into the books, what will we see in terms of percentage increases in farmland values, the volume of sales? Also, if you could, tell us how you see 1991 shaping up in terms of the farmland market.
The volume of sales in 1990, Brian, will be significantly below, particularly significantly below the levels experienced in the mid-'80s and even the late '80s. From a value perspective, in 1990, I believe we'll see a scenario where, in fact, land values increase in the area of 4 to 6%. Quality soils, very high-quality areas, probably slightly higher than that range, and the more marginal areas possibly a little lower than the range I've cited. As we look into 1991, I see a very stable situation, particularly from an agricultural income perspective, and from an agricultural land value perspective, I would have to suggest that we will continue to have a high level of interest in quality agricultural operations, but possibly not quite the level of interest, or not the level of increases in value, if you will, that we've experienced in the last 2 or 3 years, for the reasons that you've already cited, that being higher energy costs and slightly lower farm income.
Murray Wise of the Westchester Group in Champaign, Illinois, thanks for being with us today.
Nice to be with you, Brian.
Looking at other news this morning, United Kingdom farmers are not happy with the latest European Commission proposal to offer cuts of up to 30% in EC farm support at the Uruguay round of GATT trade talks. UK National Farmers Union President Simon Gourlay says the EC does not seek to destroy the U.S. support system, and they, the U.S., should not seek to destroy ours. The EC proposal is a modified version of the one outlined by Ag Commissioner Ray McSherry, which called for EC farm support to be cut by 30% over a 10-year period, backdated to 1986.
On the home front, the USDA will release its latest crop estimates this coming Thursday, October the 11th. Ahead of that report, private crop analyst Sparks Commodities has made corn and soybean yield and production estimates well below USDA's September figures. The Sparks soybean estimate of 1.81 billion bushels compares with a USDA September estimate of 1.83 billion. And the Sparks corn crop estimate of 8.08 billion is below the USDA September estimate of 8.11 billion bushels. Those USDA estimates due this Thursday will be based on field conditions as of October the 1st. Last Friday, we told you how some Delta and Southeast cattle producers are worried about possible hay shortages this winter due to drought conditions they saw this summer. And those same drought conditions took a big bite out of crop yields for many farmers. This morning, Scott Huffman reports on how the Mid-South rice crop has been affected.
After the last rice field is harvested in late October, producers will probably look back on the season with mixed emotions. A wet spring delayed plantings. That also means a late harvest. After the rain stopped, much of the Mid-South turned hot and dry. As harvest gets into full swing, the scorching climate may be a problem.
I think the biggest thing right now that's going to affect our rice crop is probably this hot, dry weather, which will tend to probably lower the milling yield somewhat.
If the climate is seen as a curse in late season, it may be viewed as a cure from the early season perspective. Diseases like rice blast and sheath blight played minor roles in damaging only a small portion of the Mississippi crop. Rex Morgan is one producer that wasn't as lucky.
We've had a little problem with sheath blight. I think it's been primarily to the stand that we had. We had a real thick stand, and that not letting sunlight down in the crop makes the sheath blight worse.
Same day we planted.
Learning to control diseases is just one reason why these rice farmers recently attended a field day at the Delta Branch Experiment Station in Stoneville, Mississippi. They also wanted to know how to improve yields. In 1989, the Mississippi average was 127 bushels per acre.
I don't think our yields are going to be as good as they were last year. We'll probably be down to maybe 122 bushels somewhere as a state average is what I'm kind of looking for this year.
Overall, Miller says this year's rice crop is in good condition. From Stoneville, Mississippi, I'm Scott Huffman reporting.
Well, the USDA reports that wetland losses on private lands averaged only 100 to 200,000 acres annually between 1982 and 1987, which the department says is significantly less than some conservation groups have claimed. The regions that lost the most wetland include the Southeast, the Delta, and the Great Lakes states. Meanwhile, more than 400,000 acres have been enrolled in the Conservation Reserve Program, which pays farmers to keep land, including wetlands, out of production.
Today's edition of the Morning Ag Report is brought to you in part by GMC Truck.
Later this morning, we'll have a report on farm safety.
And coming next, we'll review Friday's closing grain and livestock market prices, so don't go away. It was an up and down week in the grain market trade last week. Friday's session was one of the down days.
Yeah, really the trend for the week overall, Brian, was mostly steady when all was said and done.
Right.
So let's check out the Chicago Board of Trade. Soybean futures opened slightly higher last Friday, but then they came under some pressure as further soy meal sales to the Soviet Union just went unconfirmed, and pressure from the active harvesting of soybeans expected for the weekend pushed values to the minus side. For last week overall, nearby November beans were down 1/2 cent. On Friday, November lost 3/4 cent, ending at 6.17. January closed unchanged at 6.31 1/2. March beans closed unchanged last Friday at 6.55. October soy oil ended down 1 point at 22.17 cents. October meal lost 20 cents, ending at 183.40.
In the corn trade, moderate losses were posted Friday as commercial buying evaporated and the trade turned choppy. Long liquidation and speculative profit-taking pressured the corn values as December corn backed well off of resistant levels at $2.34 a bushel. For the week, December corn was up 3/4 cent. December corn closed Friday at $2.28 3/4. That was down 2 cents. March down 2.5 Friday at $2.37 3/4. May corn lost 1 penny3/4 to end at $2.44 1/4.
And wheat values were lower across the board Friday at all three wheat exchanges. News of the failed budget agreement weighed on all of the grain futures, and wheat in particular, because of ideas that the lack of action by the budget could stall any export bonus sales of wheat in the near term. For the week overall, nearby December Chicago wheat was down 4 cents. On Friday, December closed 1.25 pennies lower at $2.73 3/4. March wheat down a penny at 2.88. Kansas City December lost a half cent, closing at 2.79. Minneapolis December wheat ended last Friday at 2.69. That was down 1 3/4 cents on the day.
In New York, cotton futures were mixed early in the day as uncertainty about the budget and the outlook for the U.S. economy kept a weak tone prevalent. Later in the day, commercial buying developed, and there were ideas that the cotton harvest could be delayed due to some rains in the Delta and the Southeast. For last week overall, nearby October cotton futures were down 175 points. On Friday, though, October gained 63 points, closing at 71.25 cents. December cotton up 68 points at 72.62 cents.
And on the Chicago Mercantile Exchange, live cattle futures closed mixed last Friday. There were some gains in the nearbys. The deferreds suffered some losses. The pressure came from long liquidation as traders scrambled to get out of long positions because of budget uncertainties. Now, if federal meat inspectors, for example, are furloughed, slaughterhouses will have to curtail operations, and that would depress cash livestock prices. Feeder cattle futures also closed mixed, gains in the nearbys, losses in the deferreds. For the week, October live cattle were up 72 cents at Friday's close. The October live cattle contract was at 79.77. That was up 2 cents. December live cattle up 23 cents at 76.95. October feeders up 7 cents at 87.82. November feeders rose a dime, finishing the week at 86.95. Cash cattle market steady to down 50 cents. Texas Oklahoma steers steady, top price there $80. Illinois direct steers were off 50 cents, topping at 77.50. The Friday slaughter, 122,000, killed for the week, 623,000.
Live hog contracts closed mixed last Friday, with high cash prices being offset by a weak pork market to keep traders uncertain about the market's direction. The higher cash prices came from strong packer demand for Saturday slaughter needs before possible packer shutdowns because of federal budget disagreements. Pork belly futures made gains despite pre-weekend profit-taking. For the week, October hogs were up $2.35. At the Friday bell, the October live hog contract was at $57.17. That was down 8 cents on the day. December live hogs were up 3 cents at $55.35. February pork bellies up the $2 at $66.45. March bellies also gaining the $2 limit, ending at $66.25. Cash markets mostly higher on Friday. Omaha market was off $1 with a $59 top, but Ohio Direct up $1, best price there, $58 at the plants. Friday's hog slaughter, 325,000. The kill for the week, 1,682,000.
And in the sheep markets last week at San Angelo, Texas, slaughter lambs sold for between $50 and $54. In Oklahoma, 45 to 80 pound feeder lambs sold for between $46.25 and $51.50. Sheep slaughter Friday, 20,000. Kill for the week, 107,000.
And on Wall Street, the Dow Jones 30 Industrial Average fell 6.15 points, ending last week at 2510.64. Volume was a moderate 154 million shares on Friday. Losers led the gainers by a 3-2 margin. The NYSE Composite Stock Market Index lost 0.76 points, finishing at 170.57.
Still ahead, our exclusive farm weather forecast.
And coming next, we'll have a harvest time farm safety report. National Farm Safety Week was held last month, but farm accidents do go on all year round. And this morning we have a look at what farmers can do to make sure they don't become accident victims in this report from Deboria Janifer.
Agriculture is one of the most dangerous occupations in terms of fatal and disabling injuries.
Last year, in 1989, there were about 1,300 fatal agricultural work accidents and about 130,000 accidents that caused disabling injuries.
Farm safety practices are important year-round, but generally hit closer to home during the harvest season. Farm-related accidents usually happen throughout much of the year, but many experts agree that the harvest season is the time when the highest rate of accidents occur. Most fatal accidents involve tractors or other large pieces of equipment, but basic farm equipment and farm animals can also create serious and sometimes disabling injuries.
There are people factors. Of course, people are involved in accidents, and so there's usually something that they did or something that they did not do that could have alleviated the injury or prevented the injury entirely. But there's also other agents out there like tractors, machinery, animals that can act unpredictably, that can break, can respond in an unusual way that will inflict injury.
But while many accidents do occur on the farm, some can be prevented. Taking the time to become familiar with farm equipment, educating children and other family members about the hazards that can occur if safety rules aren't followed are good measures to take.
Other things that they can do, of course, is to wear personal protective equipment, clothing, eye protection, hard-toed shoes, long sleeves when they're handling pesticides, of course, respiratory protection, wear long sleeves to protect themselves against the sun during the summer months, hearing protectors for loud noise around machinery and tractors.
Farming can be a dangerous occupation, but following good safety rules can make it a safe and satisfying career. Reporting for the Department of Agriculture in Washington, I'm Deborah Jennifer.
We're starting this farming week with some frosty temperatures across the Canadian border region and down into the Central Rockies.
We are indeed. The higher elevations of the Rockies well into the 20-degree area. Casper, Wyoming, for example, going to bottom out around 28 degrees above zero as dawn breaks. Let's look at the low temperatures this morning. This is the map. It shows plenty of early readings in the 30s, and the leading edge of 40-degree readings penetrates into the Texas Panhandle and parts of the interior West. Now, we're going to warm up some today. Cooler air moving in during the day will keep highs restricted to the 40s in parts of North Dakota, Minnesota, and upper Michigan. On the other hand, much warmer air will stream in from the Gulf, elevating daytime highs into the 80s and 90s across the southern tier of states, emphasis on the 90s in the southeast. The contrast in temperatures is illustrated by this morning's weather map. The cooler air is following a cold front that arcs from Ontario across the plains to New Mexico. At the same time, a strong high near the central east coast is pulling the warmer air northward. And where the Gulf moisture is colliding with the cooler air, we find a precipitation shield that extends from eastern Canada back to the central high plains. Ahead of the front, look for thunder showers. Behind the front, the precipitation mostly showers. And the Florida Peninsula will be visited by thunder showers and some stormy weather to the south. So that's the outlook for today. Wayne, how about the rest of the week?
This is going to be an interesting week for harvesting. We might be able to get some done through the corn and soybean belts, but a lot of it's going to depend on the rains we've just had and then the rains coming in. It's going to be in and out. Let's check out the temperatures first, Brian. The temperature outlook from tomorrow through Saturday is for a warmer than usual time in just a little more than the eastern half of the country. Above normal temperatures will also reach into New Mexico, and they'll be found in northern California. And from the southeast quadrant of states, readings will be much above normal. Maine will have near normal readings, as will the rest of the nation. The precipitation call from the 9th through the 13th is for above normal amounts in the northern half of the plains and in the Great Lakes region, and from New Mexico across the Gulf coastal region and in peninsular Florida. Much of the west will continue to be dry, as will many of the southeastern states. Also, the Texas Panhandle may have to look hard for rainfall from tomorrow through Saturday. Harvesting in the western corn and soybean belt may be a little slow the rest of this week. Well, right now, some local forecasts and conditions. And that's the farm weather for today.
In other news, the USDA has proposed an increase in the grain inspection and weighing service fees it charges. By law, all USDA federal grain inspection services are supposed to be self-funding, but last year the agency lost about $500,000, and the losses for 1990 for the Federal Grain Inspection Service are expected to be about $3 million. As a result, the USDA is seeking a 13.5% increase in the FGIS fees to help cover the losses. Couple of farm news notes this morning. In Georgia, farmers are being warned that using peanut hulls and vines to feed to their cattle may expose the livestock to aflatoxin. Poor peanut yields due to drought have caused some Georgia farmers to try and use the crop for silage. And in Memphis, Tennessee today, AgriCenter International is hosting a special symposium on economically and environmentally sustainable agriculture. That symposium continues through Wednesday, and USDA Assistant Secretary for Natural Resources and Environment Jim Mosley is among the speakers.
And that winds up this edition of the Morning Ag Report. Thanks for taking time to join us. I'm Wayne Jenkins.
And I'm Brian Baxter. We'll be back tomorrow. Till then, have a great day.